Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're talking about first green day and first green day tips. We had first green day on the British pound and the euro, and we'll go back and we'll review the entire week. As I mentioned, each day when we start, there is a signal day. The signal day is what allows you to set up for the next day. So when I come to the screen, it's not just a matter of saying, oh, I'm at the high or I'm at the low or I'm, in a trend or whatever. The day before is always a signal day. So we had day 2 longs in the market at the close of payrolls. The market broke out on Monday and continued to go higher. We had day 3 longs in the market. We've reviewed this, but we'll go over it just for simplicity. People have asked a lot of questions about reviewing first green day, first red day, day 3 longs. This is the third day that breakout traders were taken into the market. The market then gave us a perfect sell high setup at the high of the week after breaking down and making lower lows. This breaking down and lower lows is a break in structure. Lower low, break in structure. That's the pump and dump setup. That lower low is what snow plows and clears out the low-hanging fruit prior to the vertical pump. Now, this is our timing window, remember. This is our timing window for the U.S. session. For the sell high of the week, day 3, high of the month, high of the week. For the short trade all the way back down, the all-session fade. Now, this also triggers breakout traders. Something that we haven't gone too in-depth over, but this is first red day, but also the first lower close. So you'll notice that on the Friday, even though we had a breakdown, so we had day 2 longs in the market went higher, but that's not our breakout. They're pushing higher before the vertical stop hunt. And then the pump and dump, the pump up on payrolls, and we still closed as a green day. Still a green day. At this, on our Monday, breaks down, triggers breakouts after the break in structure, the vertical pump up, the sell high. This breakout of the low of the day triggers breakout traders into the market. That's our day 1 false break, high of the week, day 1, first day of lower closes. That's our first red day. So first red day, as we've talked about, is a sell high setup, 3 peaks. And not every session is going to give a perfect 3-peak setup. We didn't get that, but there was a sell high setup later in the session. Now, I'm going to just rehash on the fact that when it's later like this, you haven't missed anything. There's a mechanism as to why it's later. There's a reason why it's later. You haven't missed any trades. If you didn't take any money off the table, if you shorted it, just prior to the U.S. 12-candle window, or in that last hour of the London-New York session, this 3-peak push gives us our second lower close. We talked about this, day 2 breakout traders. We have our second lower close. And then we had we talked about false break at the high of the week. They break out at day 3 and engulf. There's our false break short squeeze at the London Open for the low of week, high of day stop hunt. So again, remember, when they trigger the low. Now, I want to emphasize something. I am only ever looking to work from basically the blue line. And if I can't get the blue line, I want to work at the blue line inside in line with the existing move. So if I'm in the Europe-London window, we get our engulfment. I want to be working at this line. That's my target area. I talked about this ad nauseum. I'm not worried about chasing things. Once they lock it in, that's when I would look to position myself. So we have a market now that's gone vertical. And for traders who were looking to short this, again, we have a high. They put a first high. They hit it again a second time. It's not really a high. They don't engulf anything. But the second high at the New York Open is inside above the breakout high of day 2. But that closes as our first green day. So we have, I'm going to type this out. The first thing you need for a first green day is a dump day. You need a dump day. There's our dump day, day one. That's what brings it down, and all of a sudden the market is down low. We want to be down low. That's the key with a first green day. It's not just a day that closes up or anything else. I want a dump day, and then you can get a first green day on the second day, and the third day can be the trade. Now, in this particular case, we had a dump day. We had another dump day, which is why I reiterate that if they move it later in the session, you haven't missed anything. There's a reason. They're bringing it down low. They're getting you to trade down low. They're getting you to trade down low because they're setting that up for a vertical move from the low of the week at our peripheral boundaries. So, as I mentioned, the high and the low will show up in any market. Don't email me and ask me if this works on crypto or if this works on index. It works on any market when there's a setup. There is a high and a low on every single market. I don't trade weekends. So if you're trading crypto, I'd ignore the weekends and I would start the process Monday to Friday. And you have to go back and backtest that because, again, I'm not looking to try and trade one market every single day. I'm looking for the setup in the session that I'm trading on what the best setup out of all the instruments that are available. Really important to grasp that. So we have our first green day, and first green day, the ideal setup is a low of the day buy. That's the last low prior to the close. One of the things that I will often do is just draw my consolidation. That's the last high. That's the last low. The first green day trade setup. So coming back to, we have our dump. Now we need the trigger day. The trigger day is first green day. That's the trigger day. So now, as I said, there's a setup. There's a trigger day before any trade is taking place. Most of these trades are 3-day setups. So first green day is a buy low. A buy low, a low of the day setup. I talk about 3 lower peaks or 3 peaks of reverse head and shoulders inside. But one of the easiest things that I will often do is just take the high of the day and I will subtract 75 pips. This is on currencies. And why 75 pips? Because on an average currency pair, that's 3 levels. 3 levels of drop. 25, 25, and 25. 3 levels of drop. Now, so if we take the high, and we have our high is 105.46. So if I subtract 75 pips from that, that brings us down to 71. So if I put my line at 71, this is my sort of strike zone area. We are trading down. You'll notice they bring it up to the top of our consolidation. So again, this is, anybody can draw the consolidation. If the consolidation was here, then that's the consolidation. That becomes the high and low, but they give us a consolidation heading into the close. Now, we get a low of the day in the Asian session. So my next area is going to be, if it's not going to be 75 pips, my next area will be 50 pips. I want to know where is my possible entry in order, if this market's a buy low and it's going to go back up to the high, I want to know that high-low zone where I need to get in for a 50 pip move. 50 pips. So that gives me an area, an idea where if not just to get in, but I need to know, am I getting an opportunity to buy? Is there a buy setup in that 75 to 50 pip box that's going to give me a 50 pip area to enter the trade? Now this is a 5-minute chart because I know people don't like my 1-minute charts. That's okay. It's all the same because it's about the level, right? This is what I was trying to emphasize to people. It's about the level. It's about the level, the price level. So this is why all the indicators and all those things to me interfere with you actually having an exact strategy when you go to the screen to know exactly what you're looking for. So first green day, it's a buy low setup, and if I want to get filled with at least 50 pips back to the high of the day, my strike zone's around that 96 area. Now, timing-wise, again, coming back to heading into that last hour, we get a pin hammer 6:25 a.m., and that's when the march back up begins. So we've got our, I'll just box that out so people can see it. So we got our little double bottom W formation, and then they come back into it. But the timing, everything's timed. So if I came along even in the last hour looking for this entry opportunity prior to the 8 a.m. window, because these currency markets will move often when they've got the volume locked in between 7 and 8 a.m. So if they have a death line or they've broken a boundary, a high or low of the day boundary and consolidated sideways or broken structure, we can see that market move between 7 or begin the move between 7 and 8 a.m. That is where, going into the session, as we see as an example today, you're already buying mid-move. So the market comes up, we test that lower high that's made in the London window. That's our London high of the session. They engulf. This is a 5-minute chart again. They engulf and proceed back up to the high of the day. So traders who are already, the thesis is the low is already locked in and they're beginning to march back up. You do not want to counter trend that move. No news on the calendar for this day. We get our engulfment. The fill price is 22. The low of that bar is 10. That's a 12 pip stop. Okay, so remember, we've got our break in structure. They break out and pull back and engulf. Break out, pull back, engulf. This is at the end of the first hour, right at the end of the first hour. New hour's about to begin. So these traders who have entered in that first hour, filled at 22, market breaks through the high, closes at 62. It's a 40 pip move. You don't get your 50 pips, but traders who were available in the gap and who'd already done the math, they've got their fill down in that 502 area, easily got their 50 pips. So just coming back to a simple mechanism is to zoom this in, understand from the previous day's high, subtracting 3 levels of drop. Well, obviously we didn't get there. The market put a low in, so they put the low in. The market put the low in. We're waiting for them to go 75 or 3 levels, but the market put the low in at 93. What does that tell us? It tells us that maybe 50 pips is all it's going to go, and they might push 25 higher. So they might go up 3 levels. They might take this up to 75, somewhere in that area. Up here, I don't know what they're going to do. But that's my approach, because that allows me now to stick with my first green day trade setup. That's the trigger day, and that's my mechanism of approaching the trade. Let's take a look at the British pound. Coming back to our day 3 longs triggered into the market at the high of the week, high of the month, and we get our lower low, our break in structure. We get day 1 shorts in the market. Day 1 shorts. We have our first lower close. That's our dump day. So again, first thing I need is a dump day. Dump day, and before a first green day, I need a dump because I need something that it can pump. So first green day, we want to have 3 peaks. We get our Asia, London, right before US window, and the New York. So higher high right away. When I see the higher high, okay, I'll repeat this. When I see the higher high, that is my break in structure on the inside. They're going higher because they're going to go back there later. That's the dump setup. That's our dump day. So we get dump day number 2. Day 2 shorts in the market. So we're looking for day 3 shorts maybe for a buy low if we get the opportunity. They break out. Again, British pound, euro, chances are we might get that trade set up in London or Europe, which again makes sense. So there's our false break reversal at the low of the week. We got our little micro W inside there. This is a 15-minute chart. That market proceeds to auction back up. Doesn't quite get all the way to the previous day's high as they did on the euro, before pulling back inside and going into consolidation. We draw our consolidation box. First green day. First green day closes after a dump day. The close is above the open. First green day. Now I want to have a buy low setup on first green day. The next thing I want to be able to do is take my high of the day. I've got a nice tight consolidation. The high of the day is 22.33. That would mean my 3 levels of drop is at 21.58. 21.58. Now, the market makes a low in Asia. It makes a low of the day in Asia and a higher high. Just going back to the euro, again, they also did the same thing. They made a high in Asia, and then they made a higher high in the London session. That's a break in structure on the inside. So we see the same thing on the British pound, the higher high into the open of the Europe-London window. So again, that's our break in structure on the inside on our first green day. That's, remember, trigger day. The first green day, number one, we need our dump day. Then we need our trigger day. Every single trade setup has a trigger day. There's our trigger day, and then the next step is to subtract 3 levels of drop, which the market trades down to in our London session. It gets down to our 75 pips, our 3 levels of drop. And if we go to our 5-minute, we'll zoom in on this. We have a market that goes into consolidation. We get a pin hammer. So the next most important thing to understand is timing. So if I'm looking for something in that hour prior to the window, say between 7 and 8 a.m., because that's typically when they move. But in this case, we get our pin hammer, a retest, and then we get our break in structure in the new hour between 6 and 7 a.m. So again, another break in structure on the inside. This is on our 5-minute. That's the higher high. When you get the higher high, think dump and pump on the smaller time frame. We're looking for the buy entry on a buy low day after our first green day trade setup. We get our new 7 a.m. hour starting and the engulfment, the dump and pump engulfment at 7:35 a.m. Please don't email me and ask me why this is before the 12 candle window. I've said this before, the currencies can move between 7 and 8 a.m. So if you have a first green day opportunity, I'd be looking to see how that market's traded. And we'll look at some other examples of this. But today, just going over, doing some simple math and looking how you can approach this from a mathematical standpoint and understand it's about getting filled to get your 50 pips. So this market comes down and engulfs, closes at 81. The low of this candle's at 66. That gives us a nice 15 pip stop loss. And we're targeting our 50 pips high of the day. So we get our fill. The market starts to move up. Our US 8 a.m. window opens and moves directly right up to the high of the day. Our 50 pip target is just below the high of the day, and we get our 50 pips. As the session opens up, it continues the move up to the high of the day before auctioning down in 3 pushes into the New York Open and continuing that move back up. So coming back to first green day is a buy low opportunity. Thesis being we want to see that market drop 3 levels. If it only gives us 2 like we saw in the pound, we want to know our target area, and then it's the timing of entering the trade. Now obviously you can use a 15-minute, you can use a 5-minute, whatever you like, but it's about the level, knowing that if this is 50 pips away, I know that I need to have a maximum area where if I go above that I'm lessening my potential target. As we see this continue to go higher, but we want to, I like to be in the trade and be taken out as it's getting up to the high. So coming back, we need a dump day. We have a dump day. We have a day 2, day 1 shorts in the market, Monday, Tuesday, high of the day, dump day, day 2 shorts in the market. We have the false break reversal on day 3, day 3 shorts. That's the reversal trade. First green day. First green day gave us a buy low setup. And the first thing I do is I subtract 3 levels of drop. We have our consolidation to draw that in. The pound gave us a perfect opportunity for a 50 pip reversal. The euro was 50 pips, but not quite, didn't go down quite as far as the pound, but it still gave a nice low of the day buy opportunity. It continued later in the session. If you bought low, you got your 50. If you bought in the session itself, I think that was a 40 pip move. But simple math, dump day, trigger day, that's our first green day. Then subtracting 3 levels of drop from the high, we're looking for a buy low setup. Our consolidation was there. And then it's fighting for best price in the timing window. So noticing that you can try to get in early, but you might be sitting there for a couple of hours. The closer we get to the session, the higher the probability that the market is about to lift off and move. So hopefully that makes sense, traders. First green day, trigger day. That's our trigger day, and then a mechanism for using math, 3 levels of drop, to target an area for fill, and then looking at timing, best price, and then entering the market as it's about to take off. Hopefully that helps. Keep it simple. Keep focused. We've had textbook templates this week. First green day, we've had three days of higher closes, 3 days of breakout shorts. We've had high of day, low of week trades on oil. We've had some tremendous opportunities, and they will continue. So keep getting better, keep it simple, and may the markets go with you.